Great, thank you very much, everybody. And again, to the shareholders and our team members on the call today, thank you very much for attending today's session. We will be driving the presentation thanks to Sachin, and towards the end of the session, we'll be having a Q&A. So we'll get started this morning on our half-year audited results. So we'll focus on the investment highlights to begin with. And again, like we've mentioned before, PayGroup's focal point is long-term contracted revenues. Our customers sign with us for 3 years on our contracts and have an auto renewal within our contracts system. And with 98% customer renewals, we're in a very good position for our long-term client success. We've got $37 million at least in ARR as guidance for this fiscal, and we're giving revenue guidance of $26 million, all predominantly underpinned by our growing core payroll solution, which then gives us a further opportunity to monetize those clients and those enterprises that join PayGroup's growing client base. We are at a major inflection point at PayGroup, with SaaS and Services on the rise in terms of our customer acquisition, and our focus and investments on the automation and improvement on how we convert contracts to cash through implementation processes are seeing good dividends. Automation of our core payroll services and making sure that we use the right people in the right talent location obviously is a great opportunity for us to continue our gross margin improvements. Every time an enterprise joins us, a new client, they've got the opportunity to take with us our core payroll solutions, obviously, and then upsell into new countries, HCM solution, and also cross-border payments for their salaries and the equivalent of superannuation across the region. So we're starting to see those organisations, our client base, absolutely taking on more solutions from PayGroup, and you'll see that in Sachin's presentation later on. There is an increased update and taking up of our monetisation solutions, and we've plugged this, and so it's a plug and play into our software. There is no need to go off and get another app. It's all within and embedded into our software solution, which we've invested into at time of onboarding. And we'll discuss that a little bit further on. So whether it's SaaS and Services, whether it's our enterprise or payee monetisation, the outlook's extremely positive, and it's all linking to the volume of customers we have and the volume of pay slips that we generate. The financial highlights are in line with our strategy. Our strategy is to grow our core payroll business and upsell HCM, monetisation, other countries, other services as we continue to expand our reach for our customers. What's particularly delightful here is our investment into Salesforce and into marketing has seen a 6x increase in our sales pipeline from this time last year. Now that comes as a result of our solutions are desired by customers clearly, but importantly, we have the referenceable clients that actually allow us to complete the sales process to be able to achieve new contract wins to the half of 9.6 million. We will continue with that theme of outstanding sales growth and continue with the theme of focusing on margin improvement, and more importantly, continuing on the theme of monetising our enterprises and our payees with the strategic enablement with our solutions that we have presenting later on today. I also would like to compliment our organisation on our cash receipts and seeing the cash receipts being driven up, and it'll be a focal point of Elisa's presentation today. So we're affirming our FY22 ARR guidance of at least 37 million. Sales continuing from the half are strong, so we see that our organic growth in our business continues, and we have definitely also hired additional sales people since the half that will continue our sales growth. So PayGroup continues to perform as per its strategy plan and as per its growth plans. Statutory revenue guidance of 26 million, something that we've firstly done as a listed company, is based on our absolute belief of our repetitive revenue and our clients recontract with us and growing. Also in mind, despite the challenges of our last fiscal, we are seeing that this represents 95% of the FY21 ARR. So very much in line, 26 million with the 27.2 that we forecasted. The balance is obviously still in implementation and timing. However, with $37 million guidance for this year, it gives our investors assuredness of what stat revenue will be in future years. I'll pass over to Elise now for a deeper dive into our financial results. Thanks, Elise.
Thank you, Mark. We are very pleased to report a strong financial performance for our first half FY22, with revenue of 12.8 million, representing 83% growth from our prior comparable period. Our revenue growth is underpinned by strong organic sales growth in payroll and software as a service, as well as stronger demands in our monetisation streams and the acquisition of IWS. IWS contributed 5 months to our revenue in the first half of this financial year and will be contributing 6 months in the second half. Continuing to deliver higher margins as we realise cost efficiencies and sell higher margin products and services is one of our key strategic goals to returning greater shareholder value. Aside from a strong revenue growth, we made a 12% improvement to our gross margin for the first half and achieved a gross profit margin of 56% this first half compared to 50% in FY21. Our normalised operating expenses increased this first half compared to prior comparable period, were driven by key strategic hires in sales and operation capabilities, as well as overhead costs brought on to the group from the acquisitions during the period. We achieved a positive normalised earnings before income tax, depreciation and amortisation of 1.5 million this first half. As we continue to focus on organic sales, improving gross profit margins and gaining operational leverage, we expect further improvements to our EBITDA. We achieved record operating cash receipts during the period, as Mark mentioned, 13.8 million on receipts for the first half. We are proud of our first-in-class customer relationship and trade debtor management. Our customer retention was 98% for the period and reflecting the stickiness of our client base. Our provisioning for bad debts were just over 50,000 despite COVID, and we expect operating cash flow positive for FY22. The acquisition of IWS and spending on software technology are one of our key strategic investments during the period. Investment cash outflow represented net 8 million of the acquisition purchase consideration for IWS, as well as 2 million in technology R&D, which supports our annual recurring revenue growth. Our technology CapEx spend run rate is expected to remain stable as we deliver on our product innovation. Aside from delivering our strategic sales growth, partnership and monetisation expansion, and product innovation, we have been focused and delivering on improvements to our gross profit margin. One of our key strategic priorities is to realise operating leverage potential. Improvements to our gross profit margin were driven by focusing on selling higher margin solutions, increasing automation of activities and back office efficiencies, as well as increasing deployment and uptake of both enterprise and employee monetisation opportunities across a greater addressable market with higher gross margin revenue streams. And I now pass on to Sachin. Thank you, Sachin.
Thanks, Elise. Hi, everybody. So based on all the growth and the financial metrics we've just presented, it's time to discuss what creates that growth, what underpins our great performance and our continued outlook into great performance. We're onboarding more customers, 14% increase just in the 6 months from 1 April this year has taken us to over 2,500 enterprise customers. That leads to more payslips that we process on our platforms. And as we know, every payslip is a revenue generating event. But both the increase in enterprise customers and the increase in annualized payslips, all on our platforms, allows us not just to grow our core payroll business, but also allows us to monetize those customers as well as those pays and payslips. An example of that is, look, we process over $10 billion worth of wages, superannuation, etc., through our platforms. We do it for 2,500 customers and over 7.5 million payslips. All that is monetized on our platform through embedded solutions that Mark was referring to earlier. And that's led to our monetization revenue that's grown from a 18-month ago position of annualized 100,000 ARR to over 2 million ARR. And I'll explain that split shortly. And when you tie all that in with a 98% customer retention rate, you've got a growing business, sticky business, growing your core payroll, as well as adding the high margin monetization revenue, which, as Elise alluded to earlier, helps to increase our operational leverage and gross margin. So how does the actual operating metrics help our monetization? On the customer side, we've grown 5x in our number of customers. And when we grow 5x, with all the modules that we present to all our clients, we create the upsell opportunity. We create the opportunity to sell more and increase the share of wallet to our enterprise customers. And all that means it's at a lower cost of acquisition because they're already our customers, and it helps to improve our margins. And importantly, for our customers, we help them to improve their operational productivity through our HR and HCM solutions. For our payslip growth, tremendous 13x multiple of growth in payslips, and this leads to us onboarding more people on our platform. When we onboard more people on our platform, we get to monetize them through our embedded solutions. And they could be, for example, in Australia, where we upsell our superannuation choice of product through a partnership, and that drives additional revenue to us. And we've all heard about the Great Resignation in various news articles and podcasts and webinars. That whole tailwind of the Great Resignation helps PayGroup to onboard more because the individual is moving to more jobs. They're being onboarded more times on our platform. And every time someone is onboarded, we get to monetize them through our embedded financial wellness solutions. What else do we do in terms of unlocking that whole customer base do we have? So 2,500 customers, growth of 5x, that helps us to upsell monetization to enterprises like payments. And our payments have grown from a standing start of nothing 24 months ago to us servicing people's salary payments, people's pension fund payments across 75 countries. And every time we do that, every transaction is a revenue generating event for us on top of what we charge on our core payroll service. As I mentioned earlier, we have our superannuation choice product, and we're soon to launch in this quarter our Accessing Wages Earned platform. An important distinction of what we're going to launch as an embedded solution to our clients and their clients' employees. This is not a salary advance. This is where an employee gets to take their earned wage at any given time during their pay cycle. And that helps them create more stickiness, and corporates are looking for these solutions from PayGroup to create a better happiness of employees so they stick around for longer. And you can see our ARR monetization, as I mentioned earlier, has gone from an annualized ARR run rate of $100,000 18 months ago to over 2 million as is reported in our half. All that core business growth, all that monetization, when you mix it with what we call loyalty business, you know, our average lifetime of contracts is 9 years, and every year that will grow because our customer retention is 98%. How do we sell and how do we sell better? Well, we're not just getting new customers onboarded where it's 5x from a few years ago. We're actually upselling to our existing customer base. And a tremendous amount of upsells, 29% of our sales in this half of 9.6 million were upsells to our existing client base. And we've shown some examples on the screen there. Let's take laser clinics, for example. We've taken an Australian solution into Singapore, UK, and now Canada. Temenos, a long-standing customer, continues to acquire entities globally, and we upsell our solution to them. Hudson RPO, a NASDAQ-listed business, continues to expand geographies with us, as does Weatherford. So all these sales growth and our pipeline growth of 6 times increase from 12 months ago is both from our direct sales channel as well as what we refer to as our global partner program. And our global partner program, which I'll touch on shortly, complements our direct sales team as it adds 20% of those sales of 9.6 million have come from that channel. And that channel, as I'll explain shortly, is really a fantastic way for furthering our growth at a lower customer acquisition cost. So our global partner program continues to expand. And as I mentioned, 20% of our sales in this half have come from here. We expect to actually add significant new partner in this half 2 of our FY22, adding further to that solution. And you see on the screen here, we've got the likes of CloudPay and Amidas, who've really grown their business outside in Europe and America. And because PayGroup is the partner of choice across our chosen countries, we get the benefit of implementing and operating the business, which is core payroll and HCM for their customers. And every one of their customers knows that it's PayGroup performing the work. So it's very transparent. We've shown Bullhorn here, and that's where we've got our Australian contractor management SaaS platform, which is the leading platform in Australia and New Zealand. Thanks to our global partner program with Bullhorn, we've been able to unlock that Australian solution and taken it global, where we're now pitching it to the world's finest recruitment organizations out of Asia Pacific, as well as Europe. So this helps to create additional heavyweight bandwidth on top of our direct sales team. So overall, this is how we leverage our growth. This is what drives our growth. It's the increase in customer base, increase in pay slips, leading to monetization, strong sales direct organization, complemented by a growing global partner program, is a great leading indicator of our future growth. Thanks, Mark.
Thank you, Sachin. So from a strategic overview perspective, we're continuing down our strategy, deploying our SaaS platform, as Sachin just mentioned, to excellent workforce management companies and recruitment companies, firstly out of Australia, New Zealand, and now into Asia and beyond. So that's a very big focus for us. Naturally, services are a core part of our business, and that's where organisations ask us to do the payroll solutioning, the gross to net provisioning, as well as the payment of the salaries and superannuation equivalents around the region. The Great Resignation will create the demand for more services because our customers don't see, in many instances, running pay and HR transactions as core to their enterprise. So our growth and our 98% client retention is linked to the fact that we listen to our customers and we execute on their strategies combined with us. And as they invest into Asia, and as they expand from core areas of Asia into secondary tiers, such as emerging Asia, we'll continue to support them with that growth. So we constantly listen to our customers and we constantly give them the opportunity to be able to say, how would you like to look at this market differently versus a core market? So we are unique, and we do differentiate ourselves because we're always listening to what their strategy can be and should be. As Sachin mentioned, the enterprises, we're reducing complexity, improving their employee productivity every single time they move to a new geography. We improve their processes, and we improve their ability to operate and to retain a compliant and timely paid organisation. Simple to say, difficult to do. And that's why we've built our fine company. From a payee's perspective, their employees, we've talked about the superannuation choice, which is exclusively Australia, and obviously accessing wages earned, which we've started to deploy in some markets. And in early Q3, we'll continue that focus across all of Australia. Now, importantly, we will never put one of our clients' employees under any sort of financial stress. They will access their wage early. It will be funded by the company, which is the thematic from Europe, or it'll be funded by a third party with no impost or any interest whatsoever to the employee. This is a wellness program, and it's very much fitting into the ethos of PayGroup. So we'll continue on that opportunity always to offer to our clients' employees, the payees, greater flexible and financial capabilities for them to navigate their life. From an enterprise perspective, it's always about making them more productive and reducing their complexity. So who do we do this to? We are very focused on enterprise sales and growth in fast-moving multinational organisations. We consider somebody like a laser clinic funded by KKR absolutely to be in that fast-growing area. And when you think about our recent acquisitions in Australia, you'll think about those companies all have volatile workforces. So one job could have 5 or 6 people flow through it in any given year. And that type of employee volatility, turnover, gives more eyeballs onto our platform and more opportunities for us to improve processes for our customers. So hence the focus on Australian companies and ones that are in volatile employment situations where turnover is high. Underpinning that also, we do have our outstanding corporate client base. And if Australia is going through some sort of turmoil, Singapore may not be. And if Singapore is, then perhaps India isn't. So both the diversity of the client base, the diversity of the clients of the markets we operate in, and the diversity of the solution sets that we offer our clients, SaaS, service, or a combination, assures that we've got a very solid repetitive model business. I just wanted to refocus our attention on how we do this. Over 6 million of our transactions today are on our SaaS, our developed SaaS, our developed solution sets in SaaS, and developed and contracted by our clients as a SaaS solution. The balance of the transactions are obviously in services. So that's where we deploy our SaaS and we apply services to it because that's the customer's desired strategy not to operate. Take our SaaS and we operate it for them. So it's clear that we have a higher percentage of our transactions on SaaS. The gross margins therefore reflect that, SaaS companies being higher, but both offerings have that same unique differentiator from other SaaS companies. 3-year contracts, automated renewals, 98% retention. So we're very focused on the stickiness of our solutions, whether it be SaaS or services. And importantly, it's in an area where you can't get it wrong. Absolutely mission control. And as Sachin mentioned earlier, every payslip transaction that we offer is a revenue generating event and the opportunity to increase a share of wallet. We've disclosed that we're producing over $10 billion worth of salary payments and pension payments. That's only going up as a result of our customer base going up. As those goes up, the ability for us to earn more money with cross-border payments goes up. So very focused on our SaaS deployment, and obviously equally focused on the services because it's a great revenue contributor. Our modules and why we're in those modules are very much linked to monetisation. You can see that we have an extensive range of HR modules. Our customers expect us to have those. Obviously, as Sachin mentioned, the Great Resignation is here. So recruitment, learning, development and performance management to attract, retain and then pay your employees is very important. So that gets deployed into our enterprise clients and sometimes into our contractor management area and retail and franchise groups. But it's very much focused on the ability for our corporate organisations such as Appen and Weatherford and, as Sachin mentioned, Terminos to deploy those modules. So the answer to the client is yes, we do that. On the right-hand side of this graphic, you'll see some in green. Expense management, onboarding, timesheeting, part of our module suite, SaaS, our own SaaS, as well as deployed in services. This is the area where we can increase the size of the funds that we process on our technologies and through our services to be able to pay. Onboarding is the opportunity for us in Australia to offer an alternative superannuation product. Timesheets linked to payslips linked to revenue generating opportunities such as accessing wages earned. So you can see how our HR modules link to the overall thematic of core payroll and improving payments both to the enterprise, for the enterprise and on-demand pay for the payees. We are focused in Asia Pac. Obviously, it's a very large direct investment into Asia Pac, but through partnerships and direct entry, such as Japan, we're continuing our focus on assuring ourselves that we've got the right framework of in-country delivery for our clients, and particularly in the case of Japan, which is a very high-profile country, both from a unit economic perspective and also from a growth perspective. Our client base, recently acquiring our partner there, has had outstanding feedback from our client base. We're differentiated because, unlike any other organisation in our space in Asia, we have SaaS and services, both for corporates, workforce management recruitment companies in their contractor management area, as well as retail multi-site franchise stores and groups. That is a really large differentiator when it comes to the markets that we serve. And then that's underpinned by our monetisation strategies and then our 75 country network with which to unlock the Australian organisations that we've acquired into more geographies, and importantly, be able to offer end-to-end view, single view of your workforce, of all of your employees across 75 countries should you choose to do so. So we'll continue to assure our clients that we have expert knowledge. We're always focused on rapid implementation, and a significant part of our investments post the capital raise last year is all about improving our technology set to improve our implementations and the amount of time that it takes to go from contracts to cash. And we'll continue to invest in that area and assure our clients that we go live on time every time, with the right expert knowledge, focusing on the different markets that we operate in. So we are at a major inflection point. We are a SaaS company and we do offer services as well because we listen to our clients. And the automation of our core payroll services and the ability for us to access talent, not just in Australia, but where the talent resides, has the opportunity for smart shoring certain roles and certain back office capabilities. But we've got growing scale in APAC and we'll continue to drive that growth. 6x sales funnel means that we need to invest to assure our clients of an outstanding service. We want to keep that continued focus on gross margin improvement and client retention. The adoption of high margin and scalable solutions, being what we talked about earlier through Sachin's presentation of $2 million ARR within the monetisation area, is a classic example of that. It takes time. We'll continue to build on that, but you'll see growth in that area. And obviously in the payee monetisation space, where the solution sets there for on-demand pay are plugged into our onboarding modules. It's not a separate app that you have to download. There's no cost of customer acquisition there. It's simply plugging and playing it within our existing software solutions. Easy to say, obviously takes time and effort and very intelligent product people to develop it. We'll continue to work on that, and we'll roll out on-demand pay early wage access across Q3 into our larger client base and larger payslip base, which is Australia, thanks to our acquisition. So in closing, with 37 million ARR as guidance, 26 million in terms of stat revenue, which is 95% of last year's 27.2. We believe we're significantly undervalued as an organisation. We have a strong cash balance of 7.7 million with which to continue to fund our strategic efforts. That's excluding client cash. That is not our client's cash. That is our cash for us to just deploy strategically, and we'll continue to invest in the right strategic areas about product enhancement, about improving contracts to cash and our monetisation streams. And that will be a focus along with gross margin improvement. Our team on the right-hand side there that drives our organisation is underpinned by an outstanding set of world-class executives. And in our next presentation to the market, we'll be highlighting some of the outstanding executives we've got that supports the C-suite in our strategy execution. So with that, I'll certainly close on today's presentation, and I'll move over to the Q&A.
Thanks, Mark. I'm happy to take over the Q&A, and thanks to everybody that sent in questions earlier. So Mark and team, thanks very much for that presentation and the fantastic results that you guys have had over the last half year. With that, the first question we have is, could you please tell us the organic growth rate of ARR over the last half year results?
Thank you, Dean. Over to you, Sach.
Thanks, Dean. The organic growth rate, as we've mentioned earlier, was 36% from what we exited FY21 and how we have guided for FY22. And please note, this is all organic. We don't have any acquisitions in the pipeline or funnel for FY22, and that's an important point to note.
Thank you, Sachin. And that addressed the next question of, are there any current acquisitions being considered? So thank you for that. The next question is with regard to the sales team. Is there a plan to increase the sales team, and what is the current size of the team now? And how would that tie into future marketing strategy in both short and long term?
Yep, I'll take that one as well, Dean. So we have expanded our sales team. I know Elise indicated in our growing expenditure to spend in continued sales growth. So we've hired 5 new salespeople, and I know there's another question in the Q&A section. I hope that answers that one too. So the sales and marketing team globally for PayGroup, and the marketing team very much works hand in hand with lead generation, with go-to-market strategies for all our sales team, as well as our global partner program, is now up to 28 people globally. So it's continued growth. And we expect further increase in our sales and as our sales pipeline grows, which has already grown 6x from 12 months ago.
It's also beautifully dovetails Sachin into our global partner program, where we have 20% of our statutory revenue today coming from our partners with 0 cost of acquisition.
Yep.
So it's a great balance, Dean, and to the person that asked the question, thank you for that, because sales and marketing acquisition of people that can actually demonstrably present outstanding solutions in this space when you're talking about such a mission critical element of any company, dealing with most probably the largest spend. Obviously that goes through a lot of diligence and sight and very much a culture focus on our side as we look to recruit.
Thanks, Mark and Sachin. The next question is, could you please talk to how much ARR you anticipate to have up and running by the end of the financial year?
That's the guidance we've given, Dean, at least 37 million ARR as we exit FY22, which is 31st of March 2022.
Thanks, Sachin. And the next question is regarding the conversion of ARR to stat revenue, and I think you provided this earlier in the presentation, but could you clarify how that looks at the end of the financial year as well?
Yeah, we see no challenges of our ability to execute on a similar percentage metric to what FY21 to guidance and FY22 is, Dean. Excellent question, but that all links to our strategy of implementing rapidly, links to our strategy of adding a greater share of wallet of our client base as a result of monetisation, and obviously cross-selling and upselling, with 29% of our sales in the half of being upsells and cross-sells. The C in CAC is already looked after, so we will continue to focus on that growth area. Implementing an existing customer with more countries or additional modules is far more straightforward than bringing a new customer online. We obviously love new customers, but we love upsells just as much.
Thanks, Mark. And as revenues expand in the second half of this financial year, how do you expect cost to fare in line with that?
Elise?
Thank you, Mark. We expect costs to remain stable per the existing first half run rate.
Thank you, Elise. And in line around margin, where do you anticipate margin to be in the future, based on the current one we've experienced with the drastic growth from 50 to 56?
That's a great question. Thank you, Elise.
We haven't provided gross margin guidance to the market. However, given our focus on improvements to gross margin and selling higher margin products, we're very positive and excited about the material gross margin improvements that we will make over the next couple of years. Thank you, Dean.
And Dean, I can add to that I can assure investors that our key executives, both on this page and listening in and within the business, it's a core part of their KPI structure.
Thank you, Mark. And could you guys still confirm, please, that you'll be providing quarterly business updates, even though you do not have to?
January end is our next one, and we'll continue to that cadence of quarterly business updates with significant, obviously with all the significant matters as we've done in the last one, since not having to do 4Cs, but yes, we will do. We're excited to do that because there's so much action within our business, and the growth and the customer upsells are great. So we'll continue to do that for sure. Good for us and good for our clients and our future prospects to see those.
Thanks, Mark. Those appear to be all the questions that we have received to date. So thank you to all those who have asked questions.
Great. Well, thank you very much to all the investors on the call. Thank you very much to the team that's on the call as well too, both the presented and also listening in. We very much look forward to H2. The thematic of new customers and our existing customers continue to take SaaS and service from us has not stopped. We look forward to formally updating the market at the end of January, but should there be anything material between now and then, we'll certainly do so. So today's session will come to a close with a big thanks to all of our investors and our clients for their support. Thank you.